Good afternoon, everybody. Barry McGuire here. It's Monday, 5 p.m. Mountain Daylight Time, and we're in Barry McGuire's Creative Real Estate Education Group, as we are every Monday at this time. And today we are going to talk about bare trusts, as opposed to covered up trusts. No, that's a bad lawyer joke. Bare trusts and how bare trusts fit into that question that we get so many times, which is, should I incorporate? Should I incorporate? That's the most asked question that I've had in all of my dealings with investment real estate. And so today we have with us Kelly Hoy, who's an accountant. We're going to get Kelly up here and get him to tell us a little bit about himself, and then we're going to bring in Shaune Impey, our ACE mortgage broker, and get Shaune to say a little bit about himself. He's been on before, so some of you know Shaune, but it doesn't hurt to have Shaune just give us a little more background for you folks who haven't seen him or don't know about him. So let's start off bringing in Kelly Hoy. There he is. Kelly, welcome to Barry McGuire's Creative Real Estate Education Group. Thanks for showing up and yeah, thanks for showing up. That's great.
Always good to show up, and thanks for inviting me, Barry. Happy to be here for the first time. So for those of you who I haven't met yet, my name is Kelly Hoy. I'm a chartered professional accountant. I have my own firm in Edmonton on 99th Street, Kelly Hoy Professional Corporation. And a meaningful focus of my accounting practice is dealing with real estate investors and those investors that have set their investments up through a corporation, potentially using a bare trust structure, through a limited partnership, through a formal joint venture agreement, or just as individual owners reporting their rental income on their personal tax returns. So got a pretty wide range of experience dealing with investors.
Well, and that's important because when I do get options to take an accountant, I want somebody who understands real estate. And I expect most chartered professional accountants, understand real estate. But I think there's a difference when a significant part of your practice is investment real estate. It just brings you a little closer, focuses you a little bit more. So I'm really happy to hear that that's a part of your practice, Kelly. So thanks for telling us about that. Donna, Wayne, we want to make sure people get Kelly's contact details so they can deal with that. So Donna will work on that in the background. Let's bring in Shaune Impey, mortgage broker. Shaune, always delightful to have you on. Thanks for coming up and being a supporter, because I know you are.
Well, appreciate it, Barry, and I always like to help my personal lawyer on any of his broadcasts and stuff like that. Anything I can.
That's right.
You've been my lawyer for quite a while on real estate deals, and we do a lot of work together. And just full disclosure, Kelly is my personal accountant as well. So,
oh my God,
I've been with Kelly since he bought out practice from Craig McDonald about 3 or 4 years ago. Is it Kelly? I can't remember exactly.
I don't know if it's been that long yet, Shaune, but it's been a couple of years. Yeah, that's for sure.
Yeah,
maybe it seems like longer, but
yeah. So Craig was a great guy, a great accountant. Decided to retire and met Kelly and instantly figured out that he knew what he was doing, so stuck with him. And I know Kelly has clients with hundreds of properties that are with him, so he could cover, I'm sure, anybody from one or the first property up to hundreds of properties. It doesn't really matter how your portfolio is in place.
That's an important thing to note, because what someone with a property or planning to buy a property is going to do as far as thinking about or actually incorporating is quite a bit different than someone who comes along and says, all right, I'm going to buy 200 suite buildings. I've got the cash to do it, and I want to get into real estate. No point starting small. I'm going to buy a couple of buildings that got 100 suites each. Do you think I should incorporate? That's way different than somebody goes, well, I've got a few dollars. I might be able to buy one, and probably that's all I'm going to do. So but Shaune, before we get into a discussion of should I incorporate and bare trusts, just tell folks a wee bit about you. You are a registered mortgage broker. You help lots of people who are part of this group, but give us a bit more background about Shaune Impey.
Well, I have been investing myself for about 20 years, steady. I started off the first, started buying properties, bought 5 in 6 months. So I was a money partner in joint ventures with a fellow that a lot of people know, Arlen Dolan. So got those, got somebody at my door making a bit of noise there. So, yeah. So anyways, to that, sat still for a couple of years, and then bought 6 more in Sylvan Lake and bought 5 in Red Deer. So I've been buying in bunches and got myself up to 62 doors. So I've seen lots of things happen on both sides of the investment. As the broker, can appreciate what it takes to get mortgages if you got lots of properties, and been there myself. So kind of point people in whatever direction. Been a broker for a little over 4 years. 4 years today, actually, May 7th. So was in the construction business for a lot of years. That's where I got my money for down payments on properties. So I went from a joint venture money partner to buying some of my own to a joint venture real estate expert side of things. So
And a mortgage broker. So yeah, you've seen it from all sides. So, and I think that's really important as well. I mean, it gives you perspective, because I mean, you run into all kinds of situations when people consult you as a mortgage broker, and so with that background, that makes you a pretty well-rounded guy to be answering questions.
I think having the investment background and doing a lot of things helps people out to even just tell them my experiences. I mean, I can't give them accounting advice or I can't give a lawyer advice, so I don't charge enough for that. So I just talk real estate and what options are people, and often they don't think of what options they could do just because they don't have enough experience.
Mm-hmm. And I'll just say something else, folks. Shaune is a guy who believes in what Donna and I teach, which is that if you're working with somebody and you can see that they have a better and different way to solve a problem other than invest with you or sell to you or do something with you, then we play for win-win, and we say, listen, point out the other better solution. Don't just push your own solution on it and make yourself some money. If they got a solution that's better than what you got, then tell them. And what reminded me of that was our managing partner at my law firm stopped me the other day, socially distanced, of course, and said, that mortgage broker, I was looking to renew my mortgage, and you referred me to Shaune Impey, and he talked to me and looked at what I was doing and ended up telling me that I should renew with my own lender that I already had the mortgage with, that they would do certainly as well as he could do or better, and why spend money changing lenders if you didn't have to. Shaune, he was quite impressed by that. So anyway, I thought that was an illustration of what we believe in the workshops that we teach. So with that background, today, this started off as we were just going to dive right into this thing called bare trusts. So I'll just explain what that is. For real estate investors, what that generally means is that a person buys a property in their personal name. They get a mortgage in their personal name. They take title in their personal name, but they want to report the income and run the property through an incorporated company, through a corporation. So they organize an agreement, a bare trust agreement between themselves and their corporation. It says that, let's say it's me doing it. So I, Barry McGuire, do hereby state that although I'm the legal owner of the property, I'm holding it in trust for the beneficial owner, Barry C. McGuire Professional Corporation, because that's my corporation. So Barry McGuire personally holds the title on the mortgage, and Barry McGuire Professional Corporation has the beneficial interest. And if Kelly was my accountant, he might be filing a tax return for the corporation and reporting that property's income and details on my professional corporation return. So that's kind of what a Bear Trust is. Now, before we get into discussions, the whys and the wherefores and more details on Bear Trusts, when I was chatting with Kelly and with Shaune getting ready for today's session, we kept coming back to the question we hear all the time, which is, should I incorporate? Why should I incorporate? Why shouldn't I incorporate? And that comes up all the time. The notion of incorporation has
sounds sexy.
It sounds sexy, and it does sound sexy, and it's permeated the investment community in Canada and in the US, and I bet it has in other places as well. I talk to lots and lots of people who have taken courses from US gurus, and they come and see me and they go, okay, I've got my 3 corporations in place. I got my 3 levels of corporation in place, and now I'm ready to hit the investment market. And I go, whoa, 3 corporations? Yeah, my guy in the States said I absolutely needed that. So it's magic, it's talismanic, it's something that everybody thinks would be better for them if they incorporated without really knowing why or should I. Is it true, or is it just like an urban myth of some sort? So Kelly, let's move over to you, and from the accounting side of things, let's talk about what you say to your clients if they say to you, Kelly, I'm thinking of incorporating because I want to invest in real estate. So what do you say to them?
And Barry, the point you make is very good, that you see people come and they've gone to a seminar and they all of a sudden think that they need to have a company, and the conversation a lot of times goes with, I'm going to incorporate, maybe my lawyer's Barry or whoever my lawyer is, tell me about what I need to do that. And really the question should be more so why should you incorporate? And I think there's probably a misconception that immediately when you incorporate, there are going to be significant and material tax advantages to having the corporation for your real estate investment. And in fact, that oftentimes is not the case in Canada on the real estate income itself. And oftentimes when you compare the combined tax, your rate might actually be a little bit higher, close to even, but a little bit higher when running the real estate income through a company. The income is calculated generally the same way. So it kind of comes down to why would you do it? And oftentimes it's more of a commercial or a legal decision than a tax decision. And we as tax practitioners just need to know that sometimes in this instance, in the instance of real estate, we may not be the ones driving the bus with the advice, so to speak, regarding why you may want to have that legal structure versus just running the properties on the personal tax return.
Yes. So I do think you're right, Kelly, that the primary reason people think they want to incorporate is that they're going to improve their tax position. And as you stated, that's not necessarily the case at all. I did have one client tell me that they like to incorporate because that helped them keep their investments straight. It separated them out from their personal side of things. And so that was the reason they were doing it. And their plan was to incorporate a company for every property that they bought.
Wow.
We had a big conversation about that, and I think I steered them away. But management was a reason. So that's a bit much, saying I'm going to do a new corporation for every property.
But I think you make a good point there. I think that with the corporate tax filing requirements being a little more onerous, and the fact that you have to essentially prepare a set of financial statements in order to file a corporation's tax return, it gives some investor owners the sense that they're able to manage their business in a better way, because they need to have a professional accountant overseeing the reconciliation of their assets and liabilities, rather than just perhaps providing their internally generated figures of rental income and expenses at the end of the year to file a personal tax return. I think what oftentimes gets lost in it, Barry, is that a personal tax filing season is quite compressed. As Canadians, we generally are all filing for an April 30th deadline unless we're a sole proprietor filing for June 15th. So what happens a lot of times with the investors is they feel like they're getting kind of more meaningful financial analysis when they set them up in an alternative structure, because it forces them to complete meaningful accounting.
No, I think that's true. I think that's definitely true. Now, Kelly, what if I show up and tell you that I am planning to get into investing in real estate, and you know, because you're my accountant, that I have a successful business that throws off a lot of cash flow. So I've got a lot of money sitting in my other corporate bank account, because I am incorporated in my business that's doing very well, spits off about $250,000 a year in excess cash flow that's just sitting in bank accounts. And if I come in to see you and I'm in that position and I say, thinking of getting into real estate investing, how would you look at that as a proposition for somebody who thinks they want to incorporate another company?
Yeah, that could be a completely different conversation, because your source funds would be taxed initially at the small business tax rate, which is 11% in Alberta. So you're able to perhaps use some of those source funds to put a down payment onto real estate, likely within a separate company. You probably would not want the same entity. You could comment on that for legal reasons as your operating businesses, and perhaps some tax reasons as well. So you can take an initial source of funds that you've paid your business tax rate on and put those as a down payment for the real estate. Now, post recent changes, we get a little bit more complicated. Is, you know, when investment income within the company is above $50,000, it can reduce your ability to claim the small business tax rate on your active business income. So there may be more complexities than there were 5 or 6 years ago, when we would just sort of use the simple example of pay the small business tax rate and you have kind of an infinitely growing real estate pool. But the idea is certainly valid, and the point is it just requires maybe a bit more finite or detailed advice to get it set up. But in that case, you're generally looking for a within corporate structure, so you're not pulling and paying personal tax in order to put the down payment down, which is where this bare trust concept has been a lot more common. And I think, you know, I've talked to Shaune quite a bit about this.
Right. Shaune, do you have anything to add in the scenario where we've got someone who has a business that throws off good cash flow and they want to start investing?
I don't. I leave those kind of decisions to Kelly. So
okay. All right. So Kelly, let's go to the other end of let's see if we can go to the other end of the spectrum. If maybe you can think of an example where of a client who comes in and says he wants to start investing in real estate, and you being his accountant, and you knowing what's going on in his life anyway, where would it make all the sense in the world for a client to incorporate? What characteristics does that client have to have where incorporating makes sense right out of the chute?
The one we just talked about is the money sitting in a corporation already. That is the slam dunk. Yes, you're going to incorporate. Like that is the one. Where 100% you're going to do it. And the other one is where there's evident risk. And I know we're probably more in residential focused discussion in terms of investing, but if you're, pick like a multifamily or a large project where there's wanting sense of anonymity. Like that's the other one where it's kind of an immediate slam dunk, like let's go down the track and incorporate. And with the incorporation in real estate investing, like unless you're kind of using that low small business tax rate down payment, you're kind of letting your commercial decisions go first and fitting your tax in afterwards. So it's really the slam dunk where a person's coming in, say their income is from employment and they don't have a company already. It would be, where's that compelling commercial or legal reason? And your lawyer has said you need to incorporate or you really should do this. That's where there's been a huge impetus to do it from our standpoint.
Yeah. The compelling commercial or legal reason as opposed to tax betterment reason is something that needs to be discussed. Certainly, sometimes these decisions about whether to incorporate are not the client's decision. Once you get into, let's say, the commercial side of things as opposed to the residential side of things, and you're borrowing larger dollar figures, probably, maybe 750,000 up to $1 million is kind of a dollar figure where things start to change. Shaune, you might have something on that. And of course, I think it's 6 units and above. If you're buying 6 units and above, that's a commercial purchase. Is that the break-even point?
Almost always. There's the odd lender does 6 as residential, but typically 5 and above is in the commercial side of things.
So if you're borrowing on the commercial side of things, sometimes you don't have a choice about whether or not you want to incorporate. The lender says, we want you to purchase this property in a corporation, and that's how we're going to do it. If you want to borrow from us, you have to borrow through a corporation. And one of the reasons
there's the odd residential B-side lenders as well that need to have properties in a holdco, and I think it's more for the accounting and the paperwork. They know what's going on because you have to have financial statements and stuff like that. So, and a lot of other lenders, if you've got a lot of properties, they put caveats on, seeing your financial statements every year as well. So they like to see that corporation. For just what Kelly said, you get a much more thorough, detailed accounting. And I just got some year-end financials back from Kelly, and the amount of stuff that happened in my company versus the amount of paperwork was disproportional. So
that can really be interesting. But from a lender standpoint, like they a lot of times very love to just see those numbers on the statements and know that their client, so to speak, or has had an external CPA come and compile information. Like it just oftentimes can give them a little level of comfort, and like it's generally the individual would be guaranteeing all of this debt anyway, so they're not using a corporation in that sense to harm the lender. It just provides a little bit more information, and also and it can be an indication that you're going about things in a serious manner, because it takes quite a bit more to administer one.
Yes, it certainly does. So there's a couple of points in there. So when a lender demands that the purchaser purchase through a corporation, I do believe that for careful lenders, especially some of those B-side lenders, that their documentation on a commercial mortgage is way, way, way different than it is on a residential mortgage. There's pages of things that they say they want from you as a borrower every year, not the least of which is those financial statements. So they're very comfortable with a commercial loan and getting lots and lots and lots of information from the borrower on a yearly basis, and it just really seems that it only works for them in a corporation rather than on the residential side. And so then the other point there that you made, Kelly, which is another good one, is if someone borrows in a corporation, the lender, if they're doing a good job, almost always demands personal guarantees from the shareholders of the corporation. The lender knows that corporations can have no assets, or that assets that were there can be frittered away or dissipated. So they always gather in personal guarantees. Sometimes if there's other corporations, if there's related corporations, they'll get corporate guarantees from related corporations as well. And they certainly do that to improve their security. They now have all the covenants of the corporation and of the shareholders by way of personal guarantees. Which takes us over to Shaune's comment about his company that he has, that he's just had his paperwork from Kelly, and there's a whole bunch of paperwork, and I guess that was a very active corporation, was it, Shaune? You were just doing deals left, right, and center in that corporation?
It's my parent holding company, and I kind of got sucked into the 3 corporation thing way back, and I think I had 12 interest charges on my bank account and 1 corporate filing. That was the activity for my company. So
Yes. So
I got a complete set of financial statements updated, and from the year before and all that kind of stuff that it takes a lot of time and effort to do. And
Yeah, this is such a good point. Such a good point that when people kind of get sold the 3 company structure, like that third company that just sits there, it still needs to kind of do everything the other ones do, and it just for someone who is a small investor who maybe even one company does make sense if they've got sort of 3 to 7 properties and they want to set it up for the reasons we talked about. Having the triple company or holding company structure can be complete overkill and really a detriment to their returns.
yes, and so folks, on the just on that side of it, just on the dollars and cents side of it, you need to know going in that if you incorporate, that is probably in most law offices $1,000 to $1,500 to do the incorporation, just to start out. And then each year you have to file a corporate return with Alberta Corporate Registries, which is kind of around $250, somewhere in that. Maybe it could be 150, could be 400. Well, let's call it $250. And then you need a chartered professional accountant, or better to have one like Kelly, to do your financial statements. And Kelly will have his own account that you have to pay. I know for my own professional corporation, I think my yearly account is about $2,500 or $3,000, and I got a few things going on in there. So I mean, I think that's fine. But even if you have very little going on, you're going to have a decent sized account from your accountant. So money to incorporate, money to keep it the status of it up to date every year, and money to your accountant to do the annual return, tax return, the financial statements. So if you're not getting some benefit from your corporation because you have sat down with your accountant and with your lawyer and had a discussion, then that's a financial drain that you don't need. You don't need. So
yeah, and it's never a good feeling. And I think the other message that people don't know, Barry, is it's a lot of times easier to set more up than to take them away. So if we started with a handful of properties, we would be able to do a tax deferred transaction to set a company up down the road. If we started with 1 and we decided that we wanted 2 or 3, we could generally do a tax deferred transaction to set that second and third company up down the road too. So it's really easy to get bigger from a standpoint that it can be done, but to say, hey, I wish I didn't have that company and I want to collapse it and take these properties into my personal name, the act will require you to sell them at market value, and there can be a reasonable tax consequence there to do so. So it's, I would say that, for the generally when I'm talking to people that are on the fence, you lean towards doing the corporate structure after you're sure you're ready.
yes, because you can do that after the fact. You can buy 3 properties, decide you're in it for the long haul, look like it can have an advantage, and then you can roll those companies in, can't you?
Yeah, you can roll the properties into the company. Yeah.
Yes. And so, accounting question. CRA does not clearly define partnerships or joint ventures from a tax standpoint on real estate investment. Recommendations on how to manage and account books. Example, 60-40 split equity versus 50-55 cash flow. Easier in an incorporation than a JV with shareholders? Wow, that's a lot of stuff in that question. Kelly, can you see that one in your chat there?
Yeah, I can see that in the chat box. And
okay, right. Okay.
I think that's just such a fantastic question. And a lot of times, like the joint venture, the pure joint venture, so say Shaune and I each have a company and we want to buy a building together, it might actually be smarter tax-wise for our company to each be equal joint venture participants and own an interest in the building. But this how does the accounting get done thing is just such a, can be such a nightmare if people kind of don't know how they're doing it. And I would say too, the lack of clear definition. I think if the agreement's well defined, my experience has been that I haven't had significant issues with CRA for those structures that are accounted for through, for instance, a limited partnership or a formal joint venture agreement. But I think that, like, yeah, it's a lot of times you kind of get to the discussion with the accountant or the advisors, and it just can become so complicated that you sort of throw your hands up and say, hey, let's just start a corporation. For even some of the things we talked about earlier about setting up the accounts, let's just start a corporation. And you've really got to go into it eyes wide open to make sure that's the right decision. So, for instance, something that can be problematic is if you set up a JV structure under one common held JV company. So say Shaune and I do that, and then we decide we don't want to own the property together. It might be complicated for Shaune to buy me out. Does he buy my shares out? How does that tax work for him? So this question in terms of setting things up is really one that I love to work on with clients, and is really an important conversation to have in the early going to avoid pain in the future.
Hear that, folks? Good to have in the early going to avoid pain in the future. So the time you spend sitting and chatting with someone like Kelly to talk about your plans and what your predictions are for your business, where you see yourself in 1, 3, 5, 10 years. You get into all of the other questions that surround you. What's going on in your family? What assets do you have? Any expectation of generational wealth transfer from parents? There's lots and lots and lots of things to talk about as you decide how to set up your real estate investing vehicle. So, another question here. In terms of liability, what is the best way to protect? Corporate setup or personal with liability insurance? Sorry, I'm off there. I should read it right there. Thank you, Don. Just getting coaching from my producer, Don. Getting there right there too, instead of just on the side. Thank you very much. Got it. Liability. So that's something that I hear as a lawyer. I have people come to me and say, okay, I need to set up a corporation because for liability reasons. If there's some issue, I'll buy a property or properties. And then if there's some issue with my property and I get sued, I want my company to be sued, not me. So, I mean, and that's fair. That's why they call them limited liability corporations. The shareholders are not liable for the deeds of the corporation. So then you have to have a discussion of, well, what are the liabilities and the issues that you're concerned about? And they say, well, what if I forget to shovel the sidewalks and the tenant falls and breaks his neck? I mean, what happens there? And that's a harder question to answer, but I believe for most circumstances, if you speak to a solid insurance agent, you can get the kind of a policy that will protect you personally, as well as, and give you at least as good protection as you would get in a corporation. You're going to have insurance in your corporation anyway. It's likely going to be similar on the liability side to the kind of insurance that you would have if you had properties personally. So I think you can probably get as good protection personally. So should you incorporate just to protect yourself from tenants or other issues that could show up? That's a discussion of what those things are. In 45 years of doing this, I don't think I've ever had a client come to me say, well, they've launched the lawsuit. They're suing my buns off here. What am I going to do? So lawsuits and liability for what shows up in a corporation that owns real estate investments is certainly a good theoretical question, but in my experience, it just hasn't shown up very much. Not that it couldn't, but I think a good solid policy will protect you without incorporating. Shaune, there was a broker question there. I think it was a question on the ease of getting a mortgage personally versus in a corporation, which is another big question that shows up when someone is considering incorporating. Tell us about what it looks like for you as a mortgage broker when someone says, I'm going to buy personally or I'm going to buy corporately. What do you tell them about getting a mortgage?
Personal is much easier as far as the number of lenders that will do it. So some do it on the B side, B lenders, little higher rates and stuff like that, or you may end up having to pay commercial rates. So in the broker channel, it's very limited to where you can get a mortgage in a holding company.
So does that mean TD won't do it, RBC won't do it, those big guys won't, pretty much?
Not through the broker channel. So there's a couple of B lenders that will do through holdcos, or there's one that'll do a holdco, but the loan to value is quite a bit lower. So you only get 70% loan to value. So if you want to get 80% on your property, you're paying an extra 10% down on a $400,000, another $40,000 out of your pocket to put in your holdco. So.
And what about the rates? You said they're a little higher if you're doing the holdco borrowing?
The one lender that does do holdcos on the A side that I've used a little bit, the rates are a little bit higher. You can get better rates on a insurable mortgage, for instance, if you go through it personally.
Okay. All right. Jared's question. And Donna, I'm reading it right in the middle of the screen. How about that? I'm coachable, huh? All right. So what does Jared say? I sent this question to Shaune in private email, but figure I may as well ask it right here. Well, good for you, Jared, getting it right out there. Get the whole group here. On the other hand, you might just be checking to see if Shaune gave you good advice. Maybe that's it in the background. Yeah.
I haven't answered. He sent me back this email, and I haven't answered it yet because.
Okay. Oh. All right.
He's trying to catch me in public with this one. So.
Okay. Well. So I have a potential JV partner who lives in the Netherlands, other than if they are Canadian citizens who file Canadian income tax on rental properties. What kinds of products are available to them? Do they have options? So, Shaune, what do you think?
Well, the only information I got so far was that they were Canadian citizens. So if they are filing corporate returns in Canada, that does help with lenders or filing their tax returns here. So I haven't really sourced out yet from Jared where their income is coming from or where they're actually filing their tax returns. So they do like to see, the lenders do like to see you file an income tax return in Canada. So
a bit more information required there before you can move that one along. Another question. In the provinces that have a welcome / land transfer tax, which would be triggered when a property is rolled over from personal to corporate, is using a bare trust structure a way to avoid paying the welcome tax then? So from my end of it, I didn't know that land transfer tax is triggered when a property is rolled over, because I'm in Alberta and we don't have land transfer tax, so I don't ever see that in my practice. So I don't have the answer to that one.
Yeah, I wouldn't have it either, Barry. And I do deal with people across the country, but in terms of setting this type of thing up where you have, it's always, we kind of hear if you're setting something up to avoid a tax, is it proper to do that? But that would be one where you'd want to get specific advice for probably from someone doing these transactions all the time on the ground there. So it's kind of interesting, Barry. I think at your profession that you might be more kind of provincial than us, but even for us, if there's things that are advice specific to a province, you may want to find someone who's an expert there to provide that answer.
Yeah, we're as lawyers, the rules have been loosened a fair bit. I mean, I can take on files in other provinces up to a certain number before I have to do anything formal with the other province. But I find that difficult because there are lots and lots and lots of provincial rules that are slightly different that really affect how things go. So as a lawyer, I stay away from really making any definitive comments on legal matters in other provinces. I know lots about it, and I can make general comments, but it's very difficult for me to do that. But Kelly, you do a bit more. Is it a bit easier for you because you're doing tax? There's a federal tax aspect that is pretty much the same, or what? Why is it easier for you to give cross-country advice?
There's a federal tax aspect that's pretty much the same. And on the corporation side of things, there are a couple of provinces that file separate returns. One of them is Alberta, one of them is Quebec. So I just stay away from Quebec. And for the other provinces within a corporation, it's a separate schedule within the same return to file with that province. So you find that the rules across provinces don't impact kind of as much as they would maybe in a legal sense. So it is quite a bit. Yeah, I would say the barriers are quite a bit lower. I mean, that said, going back to Shaune's earlier point about giving someone the advice to your partner to kind of stay with the mortgage provider he has, a lot of times that's the right advice to have. An office where you can show up and drop your paperwork off and have a face-to-face conversation when COVID times would permit. Like there's certainly something to be said for that too, and there's a lot of great colleagues across the country.
All right. Now that we've had a pretty good discussion about the should I incorporate question, we're going to go back to where we started out and what we thought we were going to talk about during this whole session, which is bare trusts, but it seemed like we wanted to have the should I incorporate side of things first. So now let's go back to the notion of a bare trust. So when people are considering a bare trust, just to repeat, what they're looking to do is they are looking to acquire a property in their personal name, get a mortgage in their personal name, and then they're looking to report the income, run that property and report that property to the CRA under the name of a limited corporation. So if anybody looks at the title to the property, use myself as an example, it would say, Barry C. McGuire owns a particular property. And it wouldn't say anything on the title about a trust because we're not allowed to do that in Alberta as a legal matter. Trusts cannot own properties. Trusts could file a caveat saying they have an interest, but they can't own it. And if anybody looks at the mortgage to the property, it's going to say Barry C. McGuire is the borrower. So then, do I want to have a corporation where the income is reported and Kelly's filing a corporate return and telling the CRA how this property operates because the corporation is the beneficial owner and Barry McGuire is the legal owner. So that brings us right back to where we started out, which is, should I incorporate? So when you're thinking about a bare trust, you have to, I think, start out saying to yourself, having that basic conversation with Kelly or another accountant, and finding out whether or not you have compelling reasons in your situation to incorporate. Are there liability things that you're particularly worried about that you think insurance won't cover? Are there commercial reasons where you have to do it for some reason? Is your case one where the tax side of things definitely favors the corporation? You have to have all of those initial questions and get answers that make sense to you instead of doing what I think a lot of people do. And what I think a lot of people do is they say to themselves, or they have a conversation with Shaune and they go, okay, well, if I borrow personally, what's my rate and how easy is it to get a mortgage? And Shaune gives them the details. And then they say, okay, well, what about if I bought this in my corporate name and got a mortgage in my corporate name? And Shaune says, okay, here are the details on that. And then they go, well, that's a no-brainer. Obviously, I'm going to buy it in my personal name. And so they make their decision strictly on the basis of a lower interest rate. And it's not a whole bunch lower. It is lower, but it's not a whole bunch lower. And ease of getting a mortgage. And that's how they make their decision. And that's my sense of it for many folks. And as we've discussed, people, that's not an adequate reason for deciding that you want to set up a Bear Trust. Well, that's just my primary comment on Bear Trusts. Shaune, Kelly, anything on that part of it before we go on to another aspect of Bear Trusts?
Well, certainly, like you mentioned earlier, it's a lot easier to get the mortgage in your personal name with yourself on title, right? So, one thing comes to maybe when you're going to get your next property, I get the question all the time. People say, oh, I want to do this in my holding corp, and I ask them how many properties you got, and they say, well, the next one will be the first one. So they've gone out and got incorporated. So I said, well, you could buy it personally, and you can do it, do a Bear Trust and something like that. So then the lender, if they want to see your T1s to see where your income is reported for this property that you've bought, you don't necessarily have anything to show because it doesn't show up on your T1. It's on your corporation T1, right? So now you've got the liability because you've got a mortgage and everything else that goes with it, but you don't have any income to offset it. So if you're not making a huge salary, you may get tapped out and not be able to buy any more properties if you do the Bear Trust aspect. So,
Kelly, anything on your end, or?
Just comes back to understanding and asking those questions and having those conversations with folks like Shaune and yourself to understand it.
All right. Now, there's a couple of other legal considerations on the Bear Trust side of things. So, in preparation for doing this session today, I had one of our brilliant young students do a research memo on Bear Trusts, and there is surprisingly little comment in the cases, in the precedents. All of this is online. It's pretty easy to put in keywords like Bear Trust and CRA and things like that, and see whether or not this has been in court and litigated, and are there cases that talk about it. And there's very little on Bear Trusts. The one place it seems to show up is in tax cases. Shows up in tax cases where the CRA is taking issue with a taxpayer who has a situation where they believe they set up a Bear Trust and they've reported in a Bear Trust, and for whatever reason the CRA doesn't like the setup, and they're taking the position that there isn't a Bear Trust because it wasn't properly done, and therefore the taxpayer's reporting is completely offside. So there's very little in the cases about Bear Trusts. But if you're going to do it, you have to make sure that there is an actual Bear Trust in effect. I mean, it's a document, it's an agreement between you personally and the corporation, where you are agreeing to hold that property in trust for the corporation, and where you state that you're holding the legal title only, and 100% of the beneficial interest is owned in the corporation. Now, I haven't dug into those cases to see why the CRA didn't like the setup, because that was just a bit too much research for this session. If you've ever read any tax cases, they are detailed and technical, and so that would take a whole bunch more to do. But down the line, I may have another look. So that's the only place that I saw any legal comment in the vast swath of cases that are reported every day across the country. The other thing that I wanted the student to look at was disclosure. So when you go to get a mortgage, the rules around mortgages are that you need to fully disclose to your lender all the relevant information that is going on in your mortgage application. And I think it would be relevant to your lender if you were going in to purchase a property in your personal name with the intention of reporting it in a corporation through a bare trust. Now, the lender may not care about that. I've talked to to Shaune and to other mortgage brokers, and when they have raised this question with lenders on a disclosure basis, they want to make sure that their client is fully disclosing the plans for the property, and so they tell the lender that this is the plan. The lender goes, okay, well, I'm not really familiar with bare trusts, but I just want to review the details here. So title is going to remain in your name personally, and the mortgage is going to be in your name personally, and you're going to make the payments out of your account, and you're taking care of the taxes and on all the records. And for anybody who can look at this, you're the owner. Is that right? And we've got your covenant in the mortgage, we believe. And so the comment from lenders, at least at the branch level or at the kind of local level, without pushing it up the chain to a senior underwriter, is that lenders don't really care about that. Now, should they feel that way in Alberta, where they have a personal, if they have someone who's purchased a property in their personal name, they don't have that borrower's personal covenant, because that's really not enforceable in Alberta, although it is in all the other provinces across Canada. I don't know if lenders think about that part of it, but I'm at least mildly concerned if someone who's planning to purchase a property and set it up in a bare trust, I'm mildly concerned if they don't talk to their broker or their lender and say, this is what I'm planning to do. I think if a lender got their knickers in a knot and they found out about the bare trust and it had not been disclosed to them, they might be able to call that loan. Now, is that a real possibility? There's nothing in the cases where lenders took somebody to court to say, you didn't disclose this was a bare trust, we're calling the loan. So if it has been a concern, it hasn't gone to court that I could see. And so perhaps it is more of a theoretical notion from my end as a lawyer than it is a real concern. But I do know that lenders take issue if you don't tell them exactly what's going on in a mortgage application. So from the legal side, those are my comments on how a bare trust is got to be properly set up, and properly done. You should disclose to your lender and make sure they have no objection to it. So where does that leave us, gentlemen, on bare trust? Did any of that provoke any other comment from you? Shaune, anything from your end on the disclosure side of things? Can't hear you, Shaune. Shaune has gone.
Shaune had it on because there was some.
Shaune had it on mute. Okay.
Okay, so now I'm off mute, so you don't have to hear the dog barking anymore. So, so like you said, the lender's got your name on the mortgage documents, and you're responsible to pay this mortgage and everything else. So how you handle your taxes in the background, like you say, they probably don't really care. So, and if clients are setting up plan to set up a bare trust afterwards, your mortgage broker may not even know that. So
true.
How you're handling business, so.
No. Yeah, then I think that lots of people don't disclose to their lender or to their broker that this is what they're planning to do, because sometimes they're a little edgy about it. So,
just one more. The other thing is the corporation is it is you really, because you wouldn't execute a bear trust, I don't think, with anything other than your own holdco that's got you and your spouse or something on it. So it's really, it's all you. It's just, you know, how your taxes are getting handled by your accountant. So it's not like I don't think you'd do a bear trust for ABC Corporation and you don't have any kind of vested interest in that corporation.
Mhm.
Well, none of the ones I've seen, that would be certainly a separate situation. I mean, I know there are places where bear trusts are set up and they're really to hide things. I know
Straw buyer maybe.
Straw buyers. I know BC has legislated against that now. They're poking through all the layers so that everybody has to disclose who the beneficial owner is in any situation. So, all right. Well, we're right at the end of our situation. If there's any more questions, we'll try and answer one or two more. I know Wayne will pop some up for us here, and we'll see if we can get to a couple more before we sign off. Well, I guess there aren't, Wayne says, but that's it. Kelly, any finishing remarks from you?
Yeah, I think that just a great summary of the complexity of them at the end from you. And this all kind of goes back to have a compelling reason to incorporate, because when you do, you have to kind of understand all of these nuances and understand that someone may take a different view in a case, and that there is additional complexity to it. And then when you've understood that, you'll be more comfortable with your decision at the end of the day.
I like that. I'm going to take that away as kind of my touchstone, and that will be: do I have a compelling reason to incorporate? Is there a compelling reason that I should incorporate? That's what folks who are thinking about this need to ask themselves.
And
Shaune, what about you?
Well, I would say if you're going to ask it, don't ask it on Facebook. So. Accounting advice and legal advice and even mortgage advice you get on Facebook is worth every penny you paid.
Got to agree with you on that. Well, all right, Kelly, thanks very much for coming aboard here.
Thank you.
I'm sure there's going to be other opportunities in the future. It sounds like you're game for this, so we'll certainly do more with you. And there'll be Donna will make sure there are contact details for you. That's already done, she says. So, and Shaune, always fun having you on. We don't mind the door knocking and the dogs, and we're all at home. That's what's happening. I mean, today's the first day my cat hasn't wandered across in front of me, so let's not worry about that.
Yeah.
All right, fellas, thanks a lot. We'll sign off now, and we'll see you at the next go round. Thanks again. Good night, everybody.